Good morning, everyone. I wanted to address you this morning because we're going to be very active making some changes in your portfolio today. Foremost, I just want to say I hope everyone is healthy and trying to keep as positive a mindset as they possibly can. I know we got a lot of stuff going on right now. We got a little bit of panic at the disco. Markets are spooked this morning, stock markets, that is because of Trump's press conference last night where they're going to restrict travel from Europe. Further putting strain on the economy around all this uncertainty. I'm not even going to get into politics or the coronavirus at this point. We all know what's going on there. I just want to talk to you from a fiduciary perspective around some changes that you're going to see in your portfolios because yes, people, we are going to start dipping our toes back into stocks. As you know, as our portfolios have been comprised, we've been in primarily the BND, the Vanguard Total Bond Index, the TLT, the 20-plus year U.S. Treasury. I'm actually going to be reducing positions there by a third because I think those are actually getting overvalued at this point on this rush into safety and this rush into bonds. We're going to stick with gold via the GLD and the VanEck gold miners, okay, the GDX. Okay, we're going to stick with those. Gold's a fair trade, and it's a good portfolio hedge at the tail. So we're going to maintain our positioning there. Overall with the market, levels that we're watching, for the longer term, I suggest you don't watch the market. You put it away and you don't think about it, okay? Because we're gonna turn this, the ship's gonna turn around. Levels that Keith and I are watching right now, we think we're gonna retest ultimately the 2018 lows. Okay, so technically we've broken down. Okay, what we're watching here on the S&P now is the 2380 level. That's the 2,380 level on the S&P 500 index. And we're watching to retest the lows on the Dow of 21,800. Okay, that's ultimately where we think we may land, but who knows? Regardless, we're going to look at this at thirds. Okay, so we're going to take overall positioning in stocks, but we're going to do it in tranches. So we're going to dip our toes back in with the first third of an equity or a stock allocation. Okay, and we're looking to go overweight primarily two sectors: information technology and healthcare. Okay. The core of our allocations, of course, are going to be in the SPDR, the SPY, and the QQQ, which is the NASDAQ, which gives us exposure to technology. I'm going to be using the XLK to gain outsized exposure to information technology. I'm going to be using the XLV, okay, now that Bernie's going to be back, smoking the toad up in Vermont, it looks like. Healthcare names have gotten dislocated on his healthcare plans outside of what's going on in the market, which we're in that scenario where a rising or a lowering tide takes down all ships. Okay, so anything, we're looking for things that dislocated that shouldn't be dislocating. I know some of you love individual names and you're adamant about that. You know who you are. For the people that like individual names, we got some very interesting stuff that we're looking at the healthcare front, which has been very dislocated. We love managed care names, which have been getting killed because of Bernie. We're looking at Cigna, HCA, UNH. I like Pfizer. On the biotech front, I like Gilead Sciences. For information technology, if you want a little coronavirus play, two names that we love. We will get exposure to these names through the XLK. We love Amazon. Okay, common name. We like Microsoft. We like Apple. Okay, so we're going to get exposure there through the XLK. Amazon, to us. Okay, if you think about what's going on, people aren't going out of the house. Yes, they're getting hurt from a consumer perspective, but people aren't going out of the house, so what are they going to do? They're going to shop online. So Amazon's always going to be there. It's gotten hammered. We're going to dip our toes back into Amazon. We like Zoom meeting. Okay, people are working from home, right? Ticker ZM. When I say ticker, that's how you look it up, but that's what you would tell your broker. So Amazon, Zoom meeting, two little coronavirus plays that you can kind of dip your toes in right there from an idea perspective. We like Intel, Cisco, and Qualcomm. So those are some other names that we're going to be looking at today to get back into. I will write later today, and I will reach out with personal individual changes when I get the opportunity. But let's all breathe, stay relaxed. I balanced the root chakra last night. The intuition's feeling good. The gut's feeling good. Let's keep the faith. And as always, I love you all.